Capital expenditure planning within Workday Adaptive Planning provides for the ability to plan and integrate actual fixed asset purchases directly from your ERP to monitor previous asset acquisition expectations against latest real-time purchases, allowing for up-to-date cash flow forecasting capabilities, as well as more realistic expense planning, all of which can be accomplished through Workday Adaptive Planning's easy-to-use process manager, integration interface, and active dashboards. First, we'll start from the main menu, just as an end user would after receiving an assigned task or task to complete. In this example, our task, which can be distributed with auto-generated notifications via email, contains a due date for us to complete by, added description for more detailed information around the task to be completed, and even drops us directly onto the perspective we need to utilize. Within this perspective, we can see we have two different dashboards. The first is for upcoming planned assets, and the other for variance of planned data to actuals data, which we'll discuss momentarily. On the first dashboard for planned assets, we can see instructions for our users that provides detail for them on how to request any potential upcoming asset need. Now, as our user follows the instructions and completes planned fixed asset needs, such as adding a row and bringing in software expense, an expected increase for $15,000 in the month of November, by saving this and returning back to the dashboard, all of our metrics will update real time. This allows our users to immediately see an updated breakdown by asset class, an asset cost to acquisition, our expected monthly depreciation expense, and even the actual total incoming assets expected for the year. Additionally, as is the case with all dashboards in Workday Adaptive Planning, we have the ability to drill into these charts or dials to see additional information. In this example, I'll drill into November and I can see my expected monthly depreciation for vehicles increases. I can also filter by asset ID or asset class directly from the toolbar. Now, this data is great for upcoming budget cycles, as well as any known changes that may need to be made throughout the course of the year. But how do we reconcile that against actual asset register from our ERP? Well, first things first, we'll want to leverage Adaptive's version capabilities, as we'll want to be able to continue to reference previous budget decisions from a specific point in time. We'll lock our budget version or current forecast version and create a new version to operate in. So depending on your financial needs, this could be a monthly or a quarterly reforecast, or even what if scenario analysis. In this demonstration, our accounting team has just finished closing the month of September in our ERP, and we're ready to bring in the latest data to update our running monthly forecast. So I've created a 10+2 version for us to operate in. Next, we'll run our custom developed integration that allows us to perform a task either on a scheduled basis or as needed. Once that integration is run successfully, I'll move back to my dashboards. So we're now ready to leverage our new version on our second tab to see our variance to actuals. Again, you can see we have additional instructions for our users on how they should interact with this data, including steps for monitoring actual assets brought in against our plans, reviewing our budget to actual asset acquisition costs, and we can even review our purchase status by asset class now. We're able to answer questions such as, are we consistently over or consistently under planning for furniture and fixtures? Did we have any unplanned or unexpected software purchase throughout the year? And what would be the impact of cash from those real life changes in purchases? All of this up-to-date information can be used to drive future procurement behavior and even shape our upcoming budget cycle. Now that our actual assets have been brought in, we can see on an asset by asset basis, when did we expect to purchase this asset? When did we actually purchase it? Was it earlier? Was it later? When did we expect to put this asset into service? When did we actually put it into service? Was it earlier? Was it later? What would be the impact to our depreciation expense if we put it into service later in the year? Did the actual cost of the asset go up or down? Did we end up paying more than we expected or less? And what's our cash impact? Finally, did our expected useful life hold, or did our actual useful life, was it a longer or shorter useful life? What's the resulting impact to our P&L from a longer useful life? With this information, we can take what we know now to be real data from our ERP this year, combined with what is still planned for the future to update our expected cash flow and depreciation expense. Now, for an additional direct or more concise view on an asset by asset basis, we can expand to see our changes by asset chart. From here, we can see real cash impacts in the month of October. We can see for AA024, we have an impact to cash of negative 10,000. See, we had previously expected to purchase a vehicle in October for $10,000 in October, but this one was purchased earlier in the year than expected. So we've already felt that cash impact, and we can adjust our expected cash flow this month according to that. Additional KPIs and metrics can be created for us to include things such as how many assets do we have in Q4 that deviated from the previous plan? What's our deviation and outgoing cash? Is it going to be favorable for this month or this quarter? Do we know if our anticipated depreciation expense is going to be under or overstated based on real-time changes? We can answer all of these questions in real time with Workday Adaptive Planning. We can also see the real-time immediate impact to cash for especially those unplanned purchases. Over the course of the year, we can continuously monitor both cash flow changes as well as any P&L impact caused by variations to plan. We can drill it down and see the exact deviation from plan and the impact to cash by asset class or asset ID. Now, finally, just as important as being able to monitor real-time data and make adjustments to stay current and ahead of the curve, we can complete the cycle by marking our task as complete so that our manager knows we've completed this task on time. As with all things Workday Adaptive related, if you have any questions or want to discuss how this solution could work for you, please contact us at Active Cyber. Thank you.